Hi, and welcome to the Dow Market View for Tuesday, the 26th of August 2014. Starting off with the 5-minute chart, having a look at yesterday. Of course, we had the bank holiday in the UK, and as I did mention, that the market could either do one or two things, and that was just to trade in one direction or do nothing at all. But yesterday we got both. The market traded higher, then became lackluster, went sideways, and then traded back down to more or less where it actually started. So there was a bit of volatility at the start. We had a potential sell signal which was filled. As I keep saying in the videos, look to the left to see where the market had traded in the pre-market session, and here you can see that we had support. Where did the market trade down to? To the previous support, and we see the buying there, and the market then picking up in this area where the previous buying was, and then moving higher. So on this one there was a potential loss of 19 points, and as I've said before as well, we've got a V-shaped correction in the background in the daily chart, which we have nearly completed. So the buy side has been the best side for the last few weeks. This could change if we make the double top, which we'll see in a moment in the daily chart. So you've got to keep this in mind. You must always look at the background. And it's like I say, if you went to the doctor and you just said that you had a particular ailment, if he didn't actually check the background to your medical record, he could prescribe something that wouldn't be effective. And it's the same in the markets. You've got to look at the background. You've got to see the bigger picture. You've got to know where the market's been, what it's traded, in order to trade successfully on an intraday basis. So you're actually trading with and in line with the bigger picture. So here we've got prices reversing. We get the PTP and XXX. So having had to take the loss on the chin there, we've got a potential buy which is filled, and we see the market moving higher, trading up to and through the BRN there at 1450 of 17,100. The market not liking this and coming back towards the entry price, before then moving back to the upside there. So 20 pips available, or points available yesterday in this market, and then prices moving through after, but on low volume you can see there's nothing coming into the market there. You'll also notice where the market stopped here as well. It came down and tried to move back, and in Fibonacci terms, which I'm just going to draw on here for you, that's around about a 76% retracement. So from the recent high down to the low, you can see the market struggling with the 76% there, which is a good indication that if you're not already out, then you may wish to consider exiting the market, and then you see prices trading all the way back down to where they started. If we just move across to the right, we have a potential buy signal that is unqualified, as the next two sell signals also show failure to qualify as well. Very quiet actually, all things considered, once the market had made its move. Generally the market would have continued, but if we have a look at the daily chart, you will see why the market was struggling yesterday. It's just change this a bit and just narrow the price bars, and let's just widen them as well, so we've got the recent high in there. So let's make it a bit more space in the chart. So you can see yesterday the market trading up towards the 17,132. Didn't quite get there, but I'm sure if the we would just move this one over for a second, we get the markup tool here, 0, and let's go off the high of this bar and see where. In fact, let me just remove some of these other ones as well. So you can see there 17,126. We go back to the 5-minute chart and just put in the 0 there. 17,123. So there's no surprise why the market stopped in this area, because we have a day here where the market put in a triple top, and then the following day went lower in the daily chart. So this is why it's important to see the background of the market. So I'm just going to remove that one for a second, just clear the decks and have a look and see where we can expect any further weakness. We've got one here as well at 28. We've also got one here at 32, so let's just remove the 28 for a second. So as we move our way back up to the all-time high and using the 0% extension, you can see that 17,149. You need to keep this figure in mind. This is a very, very important figure if you are a buyer of this market. When the market trades to 17,149 or the BRN of 150, watch out, there could be some selling in the market. And that again is why, and I reiterate this point, that the background of the market is very important, because if you are a buyer of the market, we can see the market's down at the moment. If we just go to, let me just reset this chart so we can see where we're trading at the moment. Let's just remove all of this. You can see the market's down at the moment, 17,065. So there's a bit of buying in the market, but I mean it's irrelevant at this time of the day, which is around 6:30 in the morning. We're seeing prices having come off the close overnight. Market stuck in a sideways range, but should the market go long during the afternoon session, then watch out for 17,149, 17,132 as well, if you get a buy signal and you are long the market. In the news today, we've only got 3 economic news items. We start off with durable goods, and then consumer confidence at 3 p.m. All the rest will be out before the market opens, so it's consumer confidence at 3 p.m. that will have any effect on the market. Consumer confidence isn't too much of an issue, but note that the forecast is for lower, and as it's lower, this could have some downward pressure in the market as well. Right, that's it for me for today. Hopefully I will see you in tomorrow's market view. Let's hope we get a decent day's trading today. Not too bad yesterday, all things considered, especially that it was a bank holiday as well. Worst case scenario, ending up coming out even on the day, or just a few more pips had you have held in there until the market broke out and started to trade back above the 20 pip per scalp there. Right, see you tomorrow. As ever, thanks for your support, and thanks for watching.